Welcome to the deep dive.
You bet.
Today, we're really getting into Disney, their recent quarterly report,
Oh, yeah?
and the earnings release for Q1
Uh-huh.
of fiscal year 2025.
Right.
Trying to understand how
Yeah.
this giant's doing.
I love this stuff.
It's like a backstage pass
It is.
to their financials.
Absolutely. So
Where do we,
what really jumped out
yeah,
was that revenue
okay.
is up 5%
Mm-hmm.
to $24.7 billion.
Wow.
Net income
Uh-huh.
attributable to Disney
Okay.
is way up.
Yeah.
Like a whole 23%
Yeah.
to $2.6 billion.
Yeah, right.
Those are
Not small numbers at all.
not small numbers at all.
Not at all.
I mean, those are
Big changes.
big increases,
Yeah.
it seems like.
Well, it seems like they're focused on
Yeah.
subscriptions,
Mhm.
theatrical releases,
Mm.
and theme parks, of course.
Those are
really driving things
yeah, they're really the core.
of their success.
Yeah.
Like, I mean, and then you look at,
Earnings per share.
yeah, the earnings per share,
35%.
$1.4
Yes.
makes you think, like, what decisions
Right.
went into
Yeah. What were the
these strong numbers.
the strategic choices,
Yeah.
behind the scenes,
Mhm.
any particular content,
Yeah. What
cost cutting.
like, what really moved the needle?
Well, streaming
Okay.
seems to be huge.
Mhm.
Disney Plus especially.
Right.
They've been so aggressive getting those subscribers,
Yeah.
investing in their own shows,
Mhm.
original stuff,
Yeah.
and it seems to be paying off,
In the short term, at least.
at least for now.
Yeah.
Yeah.
The revenue's definitely there.
Absolutely.
Can't forget, though,
Oh, right?
the Star India transaction
No big deal.
that wrapped up back in
Yeah.
November. That led to some charges, right?
Oh, I did.
Pretty hefty ones.
Yeah.
$143 million
Huh.
impairment
Yeah.
charge. Impairment.
Non-cash.
Josh tax charge.
Non-cash check.
$213 million.
Mm-hmm.
Those were kind of expected.
Oh, yeah, part of the deal.
Yeah, part of the deal.
But what it means is
Yeah.
Disney's stake in India
Mm-hmm.
has changed.
Right.
So they have
So less control.
37%
Okay.
share in the venture now,
37%.
and that shows up
Right.
differently in the reports.
Interesting.
So equity in income
Okay.
of investees,
Okay, so it's a shift.
less direct control,
Yeah, less control.
but maybe less risk
Man,
in a complex market.
it's a tough market.
It'll be interesting to watch.
Yeah, to see how that plays out.
For sure.
Okay, so then
Let's look at their segments,
segments, yeah.
starting with entertainment.
Entertainment.
A 95% increase
Wow,
in operating income.
that's huge.
That's huge.
What drove that?
Yeah, we'll kick off
Content,
there.
sales, and licensing were
Mhm.
big.
And direct to consumer.
Right, so.
But then you see
Yeah.
domestic programming costs
Okay,
went up.
why'd that happen?
Part of it
Yeah.
was those guild strikes.
Oh, right back in 23.
Back in 23,
Yeah.
those had a big ripple effect
Yeah, they really did.
across the industry.
Uh-huh.
So higher costs,
Yeah.
but even higher returns.
Right, so do you think that's.
It could be
Mm-hmm.
a shift in strategy
Yeah.
for their content.
Yeah, are they changing things up?
It's possible.
Yeah.
Higher costs at ABC
Mm-hmm.
did impact things,
Mhm.
but then Hulu,
Right.
their costs there went up too.
For programming.
Okay.
Okay.
Because of subscriber fees
Uh-huh.
for Hulu Live TV.
Got it. So
So
they're,
they're putting money into
yeah,
streaming.
definitely investing in streaming.
Yeah.
And it seems to be working,
Yeah, at least for now.
at least for now.
But then-
Disney Plus, though.
Disney Plus
Mm,
costs went down
for program.
for their programming.
Interesting. So is that more
Well, I think-
efficiency?
It's probably a mix of
Yeah.
things,
Yeah.
lower marketing costs
Okay.
and the timing of their big releases.
So they're,
Being more strategic
yeah,
about when they put stuff out,
makes sense.
maximizing the impact,
Yeah.
minimizing costs.
Okay.
So balancing act.
Yeah, a balancing act for sure.
All right. What about sports? Sports. Big turnaround.
Yeah.
They're back.
Profitable.
Profitable.
Yeah.
247 million
Wow.
in operating income.
A huge swing
Yeah.
from last year.
Last year, same quarter,
Yeah.
they lost 103 million.
That's a big comeback.
Huge comeback.
Yeah, what drove that?
Well, those investments
Yeah.
they made in sports,
Mhm.
especially college football.
Right. They got those.
More CFP games.
Yeah, more game.
Drew in the viewers.
Yeah.
Probably boosted the ad revenue too.
Makes sense.
Right.
How did their affiliate revenue do?
So domestically,
Yeah.
ESPN stayed stable,
Okay.
consistent income there.
Good.
But internationally,
Yeah.
a bit of a dip.
Oh, Why is that?
Currency exchange rates
Okay.
were a factor,
Uh-huh.
and they lost a few subscribers.
Okay.
So it shows the challenges.
It's a global market.
Yeah.
It's unpredictable.
Yeah, lots of factors
Lots of factors.
at play
Let's move on.
to experiences.
Yeah, the theme parks.
Yeah,
Always popular.
they are.
Did they keep the magic going?
It seems so.
Yeah.
Operating income
Okay.
went up slightly.
Okay, slightly.
Yeah.
Even with rising costs.
Yeah, people are still spending.
People want that Disney experience.
They do.
Yeah.
It's amazing.
Yeah, it's a testament to their brand.
For sure.
But did they raise prices?
It looks like it.
Okay.
Domestic parks and resorts
Yeah.
saw higher revenue,
Right?
both from ticket prices
Mm-hmm.
and the vacation club sales.
So they're finding a balance between keeping it affordable,
Right.
but also profitable.
Exactly.
Okay.
The tough balance.
Tough balance, for sure.
All right, now let's dive into
Let's get into streaming.
streaming.
That's the battleground these days.
Is fierce competition.
What about those metrics?
Okay, so domestically,
Yeah.
Disney Plus added subscribers,
Good.
but only 1%.
Oh, so maybe slowing down
Maybe a plateau?
in the U.S.
Yeah, internationally, though.
Yeah.
They actually lost some.
They lost
Over
subscribers.
2%.
Okay, so what do you make of that?
Well,
A mixed bag.
it is a mixed bag.
Is that worrisome?
It's something to watch.
Oh, okay.
I mean, domestically, they're still growing,
Mm-hmm.
but it's small.
Yeah.
And that international decline
Yeah.
raises some questions.
Yeah, like what's going on?
Are they facing tougher competition from local services
Mm-hmm.
or regional ones?
Yeah, maybe.
Are economic factors
Oh, that's a good point.
impacting things?
Yeah.
Or are tastes just different?
In different regions.
Yeah.
That's
It's hard to say.
so many factors.
So many factors.
It's a global puzzle.
It is.
Let's shift gears
Okay.
and look at their overall financials.
The big picture.
Yeah, how's their cash flow
Well,
with all these investments?
their operating cash flow is
Yeah.
doing well.
That's good.
It's up $1 billion.
$1 billion.
Yeah, to $3.2 billion,
Okay.
driven by lower taxes
Mm-hmm.
and that strong operating income.
Right. We talked about that.
Yeah, but their capital expenditures,
Okay, that's where they're
Changing.
putting money.
we went up a lot.
Yeah, those parks,
Yeah.
resorts.
Domestically
Yeah,
and internationally.
big investments.
Big investments.
So that means
Yeah, so free cash flow
free cash flow,
actually declined
it declined.
by $147 million.
Okay, so those investments.
Yeah, they're putting a strain
Yeah,
on their available funds.
even with the good.
Even with the strong
Cash flow,
cash flow from operations.
it's a trade-off.
It is.
Short-term pain
Maybe.
for long-term gain.
Could be.
But what about shareholders?
Right. Well,
Are they getting anything?
they are.
Okay,
They repurchased 7 million shares
okay.
for $0.8 billion
This quarter.
this quarter.
Okay.
And they're aiming for
You've got a target
$3 billion
in buyback
for the whole fiscal year.
for the year.
Fiscal year 2025.
So they're signaling,
They believe in the company.
yeah, they believe in the future.
Long term.
Long term,
Yeah.
they're putting their money
Putting their money where their mouth is.
where their mouth is.
For sure.
But can't forget
Oh, right.
the legal stuff.
Yeah.
Disney's facing some lawsuits,
Several.
securities class actions,
Huh.
shareholder derivative complaints.
Yeah.
Serious allegations
Yeah,
could
yeah.
impact their financials
Potentially.
and their reputation.
Reputation, too?
And then there are those.
Oh, and the antitrust.
Antitrust lawsuits.
Right.
Those are interesting.
Really?
Really digging into,
How they do business.
yeah, how they do business
Yeah.
and their impact
You
on
think-
competition.
On competition.
Focusing on their licensing
Their agreements.
with those.
With what are those called?
The MVPDs,
VMVPDs. What are those?
like YouTube TV
Okay.
or Hulu plus live TV.
So like online cable.
Yeah, online bundles
Bundles of channels.
of live channels.
Okay.
Basically online cable.
Got it.
And the lawsuits say
Mm.
these agreements
Mhm.
have stuff in them
Okay.
that limits competition,
Mm.
could raise prices
For consumers.
for consumers,
Yeah.
and restrict choices.
So accusations of using their power
Yeah.
to control the market.
Yeah, to stifle competition.
The David and Goliath situation.
It seems like it.
Yeah.
Smaller players
Hmm?
challenging the giant,
How's Disney responding?
defending
As
themselves,
you'd expect.
saying it's all fair.
And legal,
Okay,
confident they'll win.
we'll see what happens.
We'll see.
High stakes.
High stakes for sure.
Yeah, big implications for how
Right.
they operate
Mm-hmm.
and how they treat customers.
Yeah, their relationships with consumers.
But even with all this,
Right, they're still
you're moving forward with
Yeah.
their plans.
they're looking ahead.
What are some of the risks
Well,
They've identified.
they're aware
Yeah.
of economic conditions,
Right. The economy
both here and globally.
could impact a lot of things.
Oh, absolutely.
Yeah.
Consumer spending
Mhm.
could go down. That
Yeah.
affects everything.
Yeah.
Parks,
Yeah.
Parks.
Tech dreaming.
merchandise, merchandise,
People cut back.
when things are tight.
Yeah, when things are tight.
They do.
Entertainment is
Often the first to go.
a luxury
Yeah.
in some ways.
Right.
What else are they worried about?
Well,
Competition.
competition is fierce.
It is, especially in streaming.
New services popping up.
Yeah, all the time.
Constantly.
How do they stay ahead?
Well, they've got that
Yeah.
huge library of content.
Yeah, this classic.
Those iconic brands.
Brands and franchises.
Marvel, Star Wars.
Star Wars.
Those-
Pixar.
Yeah, that's huge.
Those are big draws.
for sure.
But they're also branching out.
new stuff.
Yeah, original content to reach more people.
Quickest.
Documentaries,
Mhm.
comedies,
Mhm.
international shows.
Okay.
Recognizing that the global market
Yeah.
needs variety.
A diverse menu.
Exactly.
That also.
And they're investing
Yeah.
in technology.
Yeah, that's key.
They know
Mhm.
how we consume content is changing
Constantly evolving.
all the time.
Like they're playing a game of chess.
Like a high-stakes chess game,
Yeah.
anticipating the next move.
Yeah, trying to stay ahead.
And
Yeah.
innovate. But it's not just tech and
Well,
content, right?
yeah.
They've also mentioned,
Health concerns.
yeah, health concerns.
Double events.
Right.
Regulation.
The world can change so fast.
They can.
A pandemic,
Yeah.
political instability,
Mm-hmm.
new rules,
Mhm.
all those things can impact them.
And to really disrupt things.
Even a giant like Disney.
Even a giant like Disney
Yeah.
isn't immune.
It's a good reminder that they're not invincible,
That's right.
but they're still the company that
Correct.
brings us
Yeah.
those characters.
Beloved characters.
Those taunts.
Timeless stories.
Those experiences.
Magical experiences.
So as we go deeper,
Yeah.
let's keep in mind
The big picture.
the big picture.
Yeah.
What does Disney tell us
Right.
about the future
About the future of entertainment.
of entertainment?
Yeah.
That's what we'll be exploring
As we delve deeper
as we delve deeper
into those segments.
into those segments
And those challenges. And those challenges
and opportunities.
that lie ahead.
Stay tuned. Lots more to come.
Much more to unpack. We were talking about those streaming metrics.
Right. Those subscriber numbers.
Yeah, that mixed bag.
Yeah. Domestically,
Mm-hmm.
Disney Plus only up 1%.
Right. Maybe a plateau?
Like, is the magic fading?
I don't think so.
Okay.
More like market saturation.
In the U.S.?
Yeah, they've already reached
Right.
a lot of the people
They've got the fans.
who are likely to subscribe.
Makes sense.
So future growth
Yeah.
might be slower.
Harder to grow when
It's hard when you're already big.
you're already big.
Yeah,
But that international drop,
right, the 2%.
that seems
That's a little more
a
concerning.
little more concerning.
Yeah.
What do you think's going on there?
Yeah. The international market,
Mm-hmm.
it's just so different,
Yeah.
more diverse,
Right.
fragmented.
Right. Like the U.S.
They're probably facing more
Yeah.
competition.
From-
Local services,
Yeah.
regional services
That makes sense.
that cater to
Right. Like
different
and
funders,
it's
yeah.
different preferences.
Exactly. It's like trying to
Yeah.
appeal to everyone
With the same menu.
with one menu.
Yeah. You need variety.
Right.
options.
But you mentioned Hulu's doing well.
Oh, yeah. They're up 3%.
What's working for them?
I think it's their content strategy.
Okay.
They've got a broader range.
Mhm.
They're not just Disney.
Right.
They've licensed stuff.
From other studios.
Yeah. Other networks.
So more choices for viewers.
More choices, more diversity.
So diversification is key.
It is.
Like a balanced portfolio.
Exactly.
Spreading the risk.
Spreading the risk.
Appealing to more tastes.
Makes sense.
But how are they managing
The pricing.
the pricing? Well, they did raise prices
Right. For both.
domestically
Uh-huh.
and internationally.
On Disney Plus.
Yeah, on Disney Plus.
And that's led to
Higher average revenue
per user.
per user.
So they're betting on
They're betting on the value
yeah,
of their content,
the brand loyalty.
brand loyalty, the power of those characters.
But can that last?
It's a good question.
With all the competition?
Yeah, so much competition.
What do you think?
It's hard to say.
Yeah.
It's a tough market.
It's a tough market.
They need to find that sweet spot
Yeah.
where the price is right.
For consumers,
Consumers,
but also
profitable
like them.
for Disney.
And they have to keep an eye on,
what the competitors are doing.
yeah, what's everyone else offering?
Yeah,
It's a lot to juggle.
a lot of factors.
Let's circle back.
To the cash flow.
Yeah. The cash flow situation.
Okay.
A strong operating cash flow.
Yeah, that's good.
But big investments.
But those investments
feeding into those
are
funds.
putting a strain
Yeah.
on the free cash flow.
How do you interpret that?
Well, it's the classic trade-off.
Growth versus...
Yeah, growth versus
Windows.
financial prudence. You know,
Yeah.
their operations are healthy,
Yeah.
but those parks
All right.
are expensive.
Expensive, like
The-
building a better
Mousetrap.
mousetrap.
Yeah, but it takes a lot of
Takes a lot of cheese.
cheese.
Yeah.
So short-term pain
Potential.
for long-term gain.
Maybe
If those parks deliver.
if they work.
Yeah, if they bring in
Revenue.
the revenue.
Yeah.
But there's always risk.
Always risk.
What if people don't come?
What if attendance is low?
Or the economy tanks?
Yeah. What if people cut back
On vacation?
on spending?
So many factors.
So many factors.
But they are rewarding shareholders.
right, with the buybacks.
Yeah, the buybacks. It's a way to
To show confidence.
show confidence, return value.
$3 billion this year.
Yeah, fiscal year 2025.
That's a big statement.
It is.
Let's talk about those lawsuits.
All right.
Those antitrust ones.
Yeah, the antitrust suits
They really get into.
the heart of their business.
Yeah, the licensing agreements.
With those VMVPDs.
Right, the online cable bundles.
Yeah.
The argument is
That Disney's using its power in a way that's anti-competitive,
hurting consumers
potentially.
and competitors.
Yeah.
They're saying those agreements,
Have provisions
yeah,
that limit competition.
raise prices.
Yeah, limit choices.
Limit choices. So it's like
It is like
David and Goliath.
David versus Goliath.
Small players
Yeah, the little guys.
taking on the giant.
Challenging the giant.
The big deal.
High-profile case.
Yeah.
It
Like,
shows the scrutiny
on Disney.
that they're facing
As they grow.
as they get bigger
in streaming.
and streaming.
Everyone's watching them
Everyone's watching,
to make sure they're playing fair.
playing by the rules,
Yeah.
not abusing their power.
A good reminder that
Yeah.
even giants
big giants.
have to be accountable.
Have to be accountable.
What about those risk factors?
Their statements.
Yeah, what are they worried about?
Well, we talked about the economy.
Right, the economy
A downturn could hurt,
could hurt a lot of things.
yeah, everything.
People cut back on spending,
When times are tough.
and entertainment is
A discretionary expense.
a luxury.
Yeah.
What else?
Competition.
Right, competition.
Ruthless.
The constant battle
New services all the time.
popping up all the time.
How do they keep up?
They have to innovate,
Yeah.
deliver great content.
Yeah. They can't just,
Can't just rest
rest on their laurels.
on their laurels.
What about consumer tastes?
Oh, right.
Those can change.
They change all the time. Fickle? What's hot today
Yeah.
might be gone tomorrow.
They have to adapt.
They have to be flexible
Experiment.
with new formats, new
Yeah.
genres, different ways of telling stories,
And they have to be mindful of,
cultural differences.
right, different cultures.
Right.
What works here
Yeah.
might not work there.
It's a balancing act.
It is.
Global appeal,
Yeah.
but staying true
Just
to
their brand.
the Disney brand.
Yeah.
And they mentioned health concerns.
Right. Like another pandemic.
We all remember
You all remember
how
it.
that disrupted
It
things.
shut things down.
Theme parks closed.
Production stopped.
Travel restrictions.
It's a mess.
It shows that
Yeah.
things can change quickly.
Unpredictable world.
And speaking of change,
Technology.
technology is changing so fast.
Rapidly.
How are they keeping up with all that?
Well, it's both an opportunity
Mhm.
and a challenge.
Right.
They're investing in AI,
Artificial intelligence.
augmented reality, blockchain,
Trying to create.
more immersive experiences, more personalized,
And they're looking at,
the metaverse.
that's the big buzzword,
It is.
that virtual world.
Yeah.
How does that fit in?
It's hard to say right now.
Yeah.
Early days.
It's early days.
But they're exploring it.
Like they're stepping into a new dimension.
A new dimension.
Entertainment.
Blending the real and the virtual.
But what about the risks
Wait.
of all this new technology?
Well, there are cybersecurity threats,
Mm-hmm.
data privacy concerns.
People worry about that.
They do.
And what about jobs?
Yeah, potential job displacement.
This technology takes over,
It's a concern.
so they have to be careful.
They have to be responsible
Yeah.
with how they use this tech.
And they mentioned labor,
Right. Labor market conditions.
guild strikes
Yeah. Those were a wake-up call.
for the whole industry.
For everyone.
They need a skilled workforce
Oh, we do.
to make that Disney magic.
To make the magic happen.
So they have to treat their employees well.
Fair wages.
Good working conditions.
Address concerns.
Yeah. It's all connected.
It is.
It's not just about
It's not just about the technology.
the bottom line.
It's about people.
Yeah. Why should we care?
That's a great question.
about all this,
Why should anyone care?
about Disney's financials.
Well,
Yeah.
it gives us a glimpse
Yeah.
into the future of entertainment.
Yeah.
Their decisions impact everyone.
The whole industry.
How we watch things,
Yeah.
the stories we see.
The experiences.
It's more than just money.
And its cultural impact.
It is.
It's shared experiences.
Shared experiences.
The magic of Disney.
But it's also about understanding
the business side.
yeah, the business
The
side,
decisions they make.
technology, the social landscape.
All of it.
That shapes what we watch.
Exactly.
So we become more informed,
More informed.
more
right.
discerning viewers.
More discerning.
We have a choice
We do.
in what we support,
What we watch.
what values we prioritize.
That's a powerful thought.
It is.
Yeah.
So with all that in mind,
Okay.
let's take a closer look
At those segments.
at their segments,
Yeah.
starting with entertainment.
Mm-hmm.
So we've looked at Disney overall.
But let's zoom in
Okay.
on that entertainment segment.
Entertainment.
95% increase
It's huge.
in operating income.
It's a testament.
That's not easy to do.
No, it's not.
What were the key factors?
Well, it really shows how well their strategy is working,
Mhm.
leveraging that content
Yeah.
across all those
We
platforms.
got so much
Content is,
sales, licensing,
Oh,
direct to consumer.
it's all working together.
It really is.
Yeah.
But we can't ignore those costs.
Right, the cost.
Domestic programming,
Longer
production
weeks.
costs.
Yeah.
Part of that was,
The guild strikes
yeah, back
in
in
23,
23.
those had a big impact,
They really did.
disrupted everything.
Production schedules,
Yeah,
higher costs for talent.
most likely.
It shows that
You
even
know,
Disney
Even Disney
isn't immune
to those kinds of disruptions.
to labor issues.
Yeah, labor issues are real.
Yeah, it's all about balance,
It is.
creative vision,
Yeah.
financial realities.
You got to make it work.
But beyond the costs,
Right.
what about the content itself?
Yeah.
Have those recent releases
Yeah, how's the content doing?
worked?
They've had some hits.
Okay, good.
That animated film,
Yeah,
insert title,
I saw that one.
box office smash,
It was good.
and the new Marvel series
Oh, yeah.
on Disney Plus,
Insert title.
generating a lot of buzz.
People are talking about it.
They are.
Seems like they're connecting.
They are connected
With
with
the
audiences
With audiences, yeah.
across the platform.
Different platforms, different demographics.
That's good to see.
It is.
But there's so much competition.
So much competition out there.
How do they stand out in
Well,
streaming?
They've got those brands.
Yeah.
Marvel, Star Wars, Pixar.
Those are big.
Huge draws.
But they're also,
Branching out.
yeah, I've noticed that
New stuff.
documentaries,
Documentaries.
family-friendly comedies,
Yeah.
international productions.
Reaching a wider audience.
Exactly. You
Okay.
get sense. You got to have something for everyone.
So, diversification.
Diversification is key.
Okay, let's move on to sports.
Sports, yeah.
That segment made a comeback.
Big comeback.
Back to profitability.
Profitable again.
What drove that?
Those sports rights,
Okay.
especially college football.
Yeah, the CFP games.
More games, more viewers.
Live
Presumably.
sports are hot.
They are.
Very valuable.
But those rights are expensive.
They are not cheap.
We saw that in their costs.
Yeah, programming costs went up.
Do you think they can keep this up?
That's the question.
The profitability
Can they stay profitable?
in sports?
That's a balancing act.
It is.
Negotiating those rights.
Right. Getting a good deal.
Managing those costs.
Making sure it makes sense.
Exactly.
It's a tightrope walk. But so far.
So far, so good.
Okay, let's talk about
It's the heart of Disney.
the theme parks.
Those parks and resorts. How are they doing
They're resilient.
in this post-pandemic world?
It's amazing.
Yeah,
People still want that.
that Disney magic.
That magic, that escape
Even with,
pandemic.
yeah,
It seems like
people want to get out.
they want to travel.
They want to have fun.
They want to experience things.
It's a testament
It is.
to those experiences.
It's a character.
The power of nostalgia.
The power of nostalgia.
Yet the world's changed.
It has.
How are they adapting to what people want now?
They're not standing still.
Okay.
They're investing.
New attractions.
New attraction.
Enhancing the experience.
Yeah.
Technology.
Technology is playing a big role,
Personalization.
making it more memorable.
They're also focusing on,
Sustainability.
yeah, that's important to
Did-
people these days.
Consumers care about that.
Being environmentally conscious.
Absolutely.
So it's about
Yeah.
creating those memories,
The magic.
but also
Being responsible.
being responsible.
Yeah.
Okay, looking ahead,
The future
what challenges do you see?
for Disney.
What are they up against?
Well, they have to keep
Yeah.
that creative momentum going.
That's hard.
not easy.
to keep coming up with
New ideas.
new
that
experiences
people love.
that resonate with people.
In a world where
Yeah, where there's so much
content,
content, so many choices.
attention spans are
Shrinking.
shrinking.
It's a challenge.
It is. What else?
Technology.
Right. Technology is always changing.
It's evolving so fast.
They have to keep up.
They have to be adaptable.
Embrace the new stuff,
Yeah, but carefully.
but also be aware of the risks.
Yeah, there are risks.
So what should they be watching?
Well,
What's the next big thing?
the metaverse.
That's what everyone's talking about.
It is.
That virtual world
It has so much potential.
for entertainment
Yeah, new experiences.
and AI.
Artificial intelligence.
That's a game changer.
Yeah.
It could be.
In so many ways.
Yeah, personalizing content,
Mm-hmm.
enhancing the stories.
Even creating new forms
This
of
is-
entertainment.
It's like we're entering
It is like a whole new world.
the new world where the lines are blurred.
Between real and virtual.
Exciting,
But
but
a little scary, too. A little scary, yeah.
Yeah.
But let's end on a positive note.
okay.
What are Disney's opportunities? Where can they really shine?
They've got those brands,
Yeah.
those characters, those stories.
People love them
They resonate with people
globally.
globally,
I understand.
different audiences,
Yeah.
different cultures.
That's a huge asset
It is.
in today's market.
Absolutely.
So they've got the ingredients.
They do.
What's the recipe for success?
What?
How do they use those strengths?
They can keep expanding streaming,
Reaching more people,
new markets.
new stories,
They can use their expertise.
in immersive entertainment,
Yeah.
blend storytelling.
Technology. Physical spaces.
Create something really special.
Something unique
Push the boundaries.
of entertainment. Give people those wow moments.
Those unforgettable moments.
What else?
They can keep investing.
In the parks.
In the parks, yeah.
Make them even better.
And transform
The destinations
immersive worlds.
that transport you
Yeah.
to another place.
And they can use their influence.
Their brand power.
For good.
For good, yeah.
Promote positive change.
Social change, environmental change,
Inspire people.
to make the world better.
It's about more than just entertainment.
Yeah.
It's about making a difference.
Making a difference.
We've covered a lot.
We have
A lot of ground.
financials, strategy,
Technology, the future.
the past, the present,
Disney's triumphs.
their challenges.
What are your final thoughts?
Well, Disney is a fascinating company.
They are.
They're a giant,
Mm-hmm.
but they're also
Yeah.
facing a lot of challenges.
It's a complex world.
It is. Their decisions,
Impact everyone.
the whole industry,
How we consume content.
what we watch.
How we see the world.
It's a reminder that
Yeah.
entertainment matters.
It does.
It shapes us.
It shapes our culture,
our values.
our imaginations.
And Disney's going to keep evolving.
They're not done yet.
We can expect more innovation,
More creativity.
more immersive experiences,
Pushing the boundaries.
more stories that connect us,
That inspire us.
that make us think.
That make us dream.
So stay tuned.
The magic continues.
The magic continues.
And keep exploring.
Keep asking questions.
Keep diving deep.